Hello, everybody. Hope everybody is well. Welcome to the sort of penultimate live stream of the year. Last one's going to be on Thursday, and I'm not expecting a whole lot out of the markets this week, so we're going to talk about maybe some of the stuff that could be one to watch in sort of 2024. Obviously, we're going to do some analysis as well. We have had some data recently that's dropped, mainly towards sort of the Bank of Japan. But the Japanese yen is going to be something that I'm interested in going into 2024, considering the fact that it all depends on the Bank of Japan and how they see their interest rates going into the new year. Hi, Vincent. Hope you're doing well, mate. Thanks for joining. I did take a couple of dollar Swiss short positions, so I will go over those. I ended up coming out of those now. I banked one for 23 pips and the other for about 18 pips. So I'm going to discuss that a little bit because out of kind of all the charts that I was looking at this week, dollar Swiss was the one that I felt had a little bit more downside to go. So we'll have a little look at this kind of breakdown in here as well. But let's just go over flick over to the data that's coming up. Obviously, we're in those sort of lower volume periods now. It is a tricky trading week. Will be for the next couple of weeks until we kind of come back into those flows in January. And because of that, you have to trade with caution around this period. It could be very easily to jump into different types of opportunities this week when you see them, because maybe a lot of people around this time of year take a little bit extra time off work and what have you, have a little bit of or have just some spare time to jump into the markets. But I do think that's a little bit of a trap. But that being said, I have taken a couple of positions. They're probably the only two I'm going to take this week. And we're going to focus on maybe just a little bit of sort of development work for going into next year. If you haven't seen any of the sort of latest videos on YouTube lately, I've tried to do some kind of videos that are going to help you maybe get better in 2024. So let's just kick off with the news anyway, and then we're going to go from there. So obviously we've had the data out of the Bank of Japan now. They are sticking to their ultra loose monetary policy at the moment. They need to see further developments within wages and prices in order to consider changing that stance on monetary policy. And you've got to think the Bank of Japan haven't acted for a long time now. I'm pretty sure it's 16 years, but don't quote me on that, where they haven't really gone into those moves on hiking interest rates. So they're not going to change tactics quickly, are they? You know, they're not going to change tactics quickly. So they're going to have to need to see some evidence, which is good because we can then assess the data that comes out of Japan and whether they are going to move or not. We've had some data out of Canada. We've had CPI data, which came in a little bit better than expected. The CAD's actually strengthened off the back of that. So CAD has been performing pretty well going into this week. Tomorrow, we've got some CPI year-on-year data out of the UK, and we've also got the CB consumer confidence out of the US. And then going into Thursday, we've got that final GDP and unemployment claims, and then pound retail sales, GDP, and core CPI. But by the time it comes to sort of Friday, I doubt many traders will be at their desks on that Friday. So, like I said, it's going to be a slow week, I feel. Market's going to be driven by this data, which is kind of what we're seeing at the moment. If we just flick over to the likes of dollar yen in here, we have had a rebound from those 144 or 141.60s, and we are finding that support here at the moment. Price has been climbing a little bit higher, so we may see a move up towards that sort of 146 level. I do think the dollar is a weaker currency at the moment. We had a little look at sort of the fundamentals behind the US dollar, and you know, the Fed are holding that dovish tone, and the market are responding by, you know, selling off bonds essentially, and that is leading to the sort of weakness that we're seeing in the US dollar. We can see here the 10 years heading down towards that 3.8 3.75% areas. We've got the 2-year yields as well, also struggling at the minute, holding just above that 4.33% low, which formed back in June. So the market is responding by almost seeing the Fed are going to cut rates. Now, we have to be a little bit sort of on our toes here, because central banks don't cut rates unless they really, really need to. Okay. So I think that's the risk that's going to be something to watch going into 2024. The market is pricing in. What if they get disappointed? Okay. There could be some shocks in the market via some disappointments to whether the Fed or any other central bank doesn't follow through with their rate cuts. I think the one central bank that probably will cut rates is the ECB. Okay, I think the ECB are more likely to cut interest rates than the Federal Reserve going into next year. All right, guy. Hope you're doing well, mate. But yeah, let's kick it off actually with going over sort of the US dollar index, going over the dollar Swiss trade that I've taken, and we can kind of break down those moves. And yeah, hopefully you learn something from that as well whilst we kind of go over this. But yeah, the dollar index last week sustained below that 104 handle. We've breached the 103. Testing 102s at the moment, and it looks like we were going to get that little bit of a rebound. Okay, so if I just zoom into the 102s here, let me just change the angle here so you can see it a little bit better. We were looking at the 102s here, and we did see a slight rebound on Friday. Okay, so Friday we saw a rebound. Yesterday didn't really see much. That's probably down to the fact that we had a lack of data. Data's obviously coming out today, so we've seen a little bit of sort of shake up here slightly, and but look at the sort of averages compared to sort of last week. We haven't really seen much going on at the moment, so I think, like I said, it's going to be data driven this week, and the market's going to move around those points. But dollar is a weak currency for me. I can see price coming back towards those 102 handles. If we do break these kind of daily highs here, then yes, maybe a 103 could be tested. Do I see the dollar back at 104 before the end of next year? I don't, unless we see some really strong developments in those sort of data drops that come out. If we get really strong data, then obviously, the market could be back towards that 104 resistance. But I don't quite see that yet. I'm going to keep a good eye on the bond market. I'm going to see where that's kind of positioned, and if that can kind of give me a little bit of a heads up into what happens going into sort of the new year. So dollar's a little bit down for me. Like I said, I ended up taking a couple of dollar Swiss positions. Let me just bring in my trading terminal here. The reason why, actually, let me just explore the reason why we actually took this. I actually featured this in the week ahead analysis video I posted it a little bit earlier, so it was on Saturday. But if you did view that video, then you would have seen that I was looking to see dollar Swiss potentially coming down towards this 0.86 level. Now, we've been pretty bearish since the 92.25 highs, which formed back in October, and the market has been sort of trending lower here, if we can call that sort of that sort of micro trend here. We've been pretty flat for the year, if we kind of consider where price sort of started at the beginning of the year. The market has been fairly sort of range bound on a yearly basis, but we've started to make these lower highs, lower lows. And what I looked at was the fact that we were very close to this support area. Now, when price is very close to support, I like to look for that kind of move into the level. We can often see sellers getting quite aggressive into areas of support. Okay. And that's because we're kind of at that sort of area where everyone's going to look to take profits essentially. So it's it can be a good way to sort of get a little entry into the market when you're trying to look at sort of these support and resistance levels. The sellers can get very aggressive to drive prices to those points, mainly as well for liquidity purposes. So the market coming into this level made sense to me. I ended up taking a couple of scalps, to be honest, because I don't really want to hold anything sort of midterm this week. And what I noticed on the week ahead analysis video was that we were coming in and testing this 4-hour area of resistance. So the market had obviously found some resistance. We pull back into that level. I like the idea of price sort of breaking this, what I like to call a counter trend line support. What I mean by that is if the predominant trend is to the downside, so let's say like in this example here, the market is trending lower. If the market kind of pulls back and gives me kind of a few lows to work with, sometimes I like to just place a trend line on that. And if it breaches that trend line support, I assume that the trend could be continuing after that point. That's exactly what's kind of going on here. I was looking at the fact that the market was making lower highs and lower lows. We'd come up into a level of resistance. I like to look to see if price is going to potentially continue the trend and essentially just target the swing lows. So if I just bring back in my trade terminal here, I can show you that in a little bit more detail. So, you know, I like the 50 and the 200 moving average. The 50 is the red, the 200 is the white line. Okay, so just for you guys that have kind of viewed my trading before, and I especially like to use these on lower time frames. Okay, kind of keeps me in line with the overall sort of bigger picture here. So my first trade came here. I sold. I actually put my stop loss just above this swing high in here, pretty much where we kind of crossed over. I wanted to kind of leave my stop losses just above the highs there. So I ended up going short here. That was a close below the 50 MA trade. Okay, so it's a little bit different to what I took in here. But I took a short position in there, ended up banking that for 23 pips. Basically, I saw price was kind of struggling towards this low, so I ended up exiting my position at that point. My overall target was that sort of low down through there, but I haven't held either of the trades to that point because there were a few lows in the way. And like I said, when you're kind of going into a trade, you have to already plan your sort of entries and exits, okay? And I knew that I didn't want to hold these positions for long, okay? Because I thought that this week's going to be a difficult trading week, okay? So I wanted to get out essentially early on my positions. Now, price actually spiked up a little bit this morning, and I like the idea of shorting below the 200 moving average as well. So if you ever look at the 50 and the 200, sometimes you can get some good entries around the 200 MA on a 5-minute time frame. So I ended up doing that. Got short in here, put my stop loss quite aggressively above the high there, and I just targeted the swing low. So it was a good risk reward trade, and I ended up banking, I think it was something like, what was it? Let's have a look. It was 18 pips. Okay, so again, kind of got my trading done early this week, really. 2 solid trades. Happy with that. Don't really need to jump on anything else going into this week, I don't feel. Like I said, especially with all the stuff going on. Hiya, Fran. Hope you're well. So yeah, let's go and have a little look around. One market I did quite like the look of was cable. I didn't take anything in here in the end, but I liked the idea of price potentially moving a little bit lower. This kind of went against my sort of dollar bearishness. You know, I wanted to be a dollar bear, so arguably why I haven't taken my position in here. But what I did look at was a potential sort of setup in terms of we came into this one spot 27.75. We rejected that, and I was looking to see would price kind of come back down towards this support level right about the one spot 25.25 handle. We've got this nice confluence with the trend line support, so I thought there might be an opportunity to see price kind of do this essentially. Now if we kind of look at it from a fundamental window, obviously the Bank of England are not necessarily looking to sort of cut rates, but they're looking to sort of hold. There might be a potential to hike. I know some data has dropped recently which kind of goes against that, but the sort of bigger picture could be the fact that we may need to hike again, because in England, the inflation is still very high compared to other sort of G7 countries. The US, obviously, Fed is dovish at the moment. That's the only thing I can say. Do I think the Fed are going to cut rates? I am more 50-50 on that, but they are fairly dovish at the moment in tone. And that's why, I actually think from a fundamental picture, cable could move higher, okay, like what we're seeing now. So that would have been a very aggressive trade to do that. I didn't take anything here, but what I was looking at was the 4-hour time frame and looked at the fact that we created this high and the market came back into that. And this is the beauty of using sort of your higher time frame analysis with your lower time frame analysis. So I went to a 15-minute time frame. Now, one of my rules is if price gets to this zone, I've got to see a pattern develop. Okay, I've got to see some kind of bearish pattern, whether that be a double top, whether that be a head and shoulders, anything to suggest that sellers are stepping in at that point. And it didn't happen. Okay, so if you're just a purely technical trader, this is where it's a good idea to just follow rules, because if you just started to short this zone just for the sake of it, essentially, because you think that you're going to be right, you would have been absolutely, annihilated here. So it's always good that when you have a plan mapped out in your head, a bit of a bias towards the market, always kind of wait for that rule setup. You can see here, the market was above averages as well, which again, usually a bit of a no-go for me, considering that this market is more of a sort of essentially was pushing to the downside at that point. So yeah, glad I didn't take that in the end, and glad I just stuck with dollar Swiss, to be honest. And yeah, obviously the market has taken a move higher. I think a break above 127.75 could be pretty likely on cable, and that could introduce some fresh buying up to the 129.50. I wouldn't be surprised if we saw a move towards 129.50. I don't think we're going to get that obviously this week, but maybe going into the new year. Ifran also shorted dollar Swiss for a good 29 pip move today. Nice. Yeah, you held it a little bit longer than I did. Well, obviously, depending on where you got in. I could have had, if I held it towards the low, 35 pips was the sort of max I could have pulled out of that. I ended up coming out at 18 for the lows. But yeah, I did leave a good chunk of profit on the table there. But like I said, I had 2 positions. I was really happy with that result. Didn't need to hold on to the risk there. But yeah, cable's looking pretty good. I'd keep cable on the watch list. Dollar CAD's obviously a very interesting market at the moment. I actually did a video on dollar CADs, which should be coming up pretty soon, just talking about sort of looking at how you can use higher time frame entries in the market. Now, you've seen a lot of my trade, and a lot of my style is I use the higher time frames to then kind of find these zones and then go into lower time frames and look for those positions. But you don't necessarily have to do that, okay? One thing that you can do is just use the daily and the 4-hour time frame. And in that video, I was discussing basically what happens at these key areas of support and resistance. And a candlestick pattern that I think you can use quite effectively is something called the lower low, lower close, okay? Now, you probably already know what that is. It's basically, let's say you've got candlesticks coming into the move here, and you see the market just kind of stall a little bit, and then you get a down candle which has a lower close, basically a lower close than the previous candlestick. Okay, that is a good sort of example that sellers have come back into the market. And this is a good example of where you could have used it, because this was the daily area of resistance, and then the market comes into that resistance zone. So if you were, struggling with this year, especially with how you enter a market, then you could look for something called the lower low, lower close. Because if you look here, all this 4-hour here, you don't get it until this point here, which is on the 7th of December. So if you placed a sell stop order there and you put your stop loss above the zone, you've got around a 50 pip stop loss. First target's always the lows in here. That's a 1.6R. You would be up currently around about 4.34R. Okay. And that's just simply using the daily and the 4-hour time frames. Okay. Obviously, you're not going to get as many opportunities using that. And that's why I don't particularly look for this all the time. But it's also a good sort of sort of useful thing to see, even if you were a lower time frame trader, because if I was to see that the market came into those highs, it was looking like it was rejecting. I saw the 4 hour produce that sort of candlestick setup, then I could potentially go to a lower time frame. And let's say for me, for instance, I'll be looking at the area where the selling took place from. It come back into there. That's where I'll be looking to get involved with the market. And then obviously, you know, whatever happens, happens. But that's just because I can increase my reward to risk ratio, essentially. Right, guy, that's a really aggressive entry for me. Yeah, it's not for everybody. It's just an option if somebody was struggling with their sort of trading at the minute, and maybe their one focus is that they don't seem to be getting in, or they're waiting for sort of the perfect setup. You know, sometimes my trading's as simple as it closes below a 50 MA. I'm happy to get involved. You know, I'm not too into the whole sort of you've got to see a specific candlestick setup. You know, I think the zones are more important than the actual sort of price action surrounding it, in terms of like finding a specific, like you've got to see a pin candle for something or something like that. If your level's good enough, you know, you don't necessarily have to wait for the perfect thing. One thing I do is wait for the change of trend. Change of trend for me is something that I've always been able to rely on. So yeah, dollar CAD's looking pretty good here. Let's have a little look at the weekly chart. It looks to be breaking below this low. Again, it's kind of like it's kind of a big range, isn't it? Got the highs in here. Obviously, we've had that little bit of a rebound in oil as well. There's lots going on in terms of oil at the minute, mainly to do with sort of the shipping lanes at the moment. There's a little bit of confrontation going around in the sort of shipping lanes, and that's caused the sort of oil prices to move a little bit higher. But we've got this kind of area here which could be interesting. The market's obviously developed within this range. We come to the highs of the range, we've rejected. So to me, this would be a good idea to look for shorts, because we're only 190 pips to 100 pips to a big support zone, and to me that is where everybody would be looking to target. So the way we can kind of set this up is, again, just by looking at those key areas of support and resistance. Like, you know, that ship there might have sailed. Okay, that ship there might have sailed. That is a very good area of resistance, because you've got lots of consolidation. You know, if I was to throw a sort of fixed range tool on there, there'd be a lot of volume up here. Okay, so that consolidation would be a good area to look for some ideas. But that's only if we were to trade above this area now. Okay, and the way, again, I like to see things is you've got higher volumes, low volume, and if the market sort of develops in here, there's going to be high volume again. So what we need to see is price. If it breaks back into the low volume area, it will come back up towards the higher volume zone. If it doesn't, which is what we're expecting, it's kind of like looking at that 1.34 level in here, then that could be our opportunity to see a move down to that sort of 32.50. So that's what I would like to look for personally. Is I'd like to look at sort of this area in here, and if price was to come back into there, how does the market react? You know, if I go to an hourly chart, does the price come back into here and I see some kind of 5-minute change in trend, you know, as we always look for? And that could be a good area then to start looking for continuations to the downside at that point. If I was looking at it from a 5-minute perspective at the moment, you can see that the averages have crossed over, and you know, that to me is a good opportunity to see maybe price will come back towards the averages and maybe have a rejection to the downside there. You can see that once they kind of get going, it kind of hugs the 50 quite well. So multiple different options there. I'd like to see that resistance being tested again. I think I'm actually going to just add a quick alert up towards that 134, see if we can get a nice little rejection back up at that point. That might be a catalyst to see a little bit of further downside. Vincent wants to take a look at CAD yen, so maybe we'll jump over to CAD yen. If I've seen your message as well. Looks like Nat Gas is rolling over again. Started to move while I was sleeping. Yeah, we'll have a little look at Nat Gas as well. You know, done very well off natural gas, to be honest. Yeah, it does look like it's moving again, actually. So we can go definitely take a look at that one. Dollar CADs we've done. Let's go to CAD yen. So yeah, CAD yen could be an interesting market. I actually like the yen sort of potential, especially going into next year. We obviously discussed the recent sort of announcements from the Bank of Japan. That's going to play a big role into what happens next year, I think, for the yen. And depending on sort of where that sort of yen trade kind of comes from, I would be looking to see sort of the yen weaken over the next kind of course of a while, or sort of next few weeks. And then maybe we're going to start to see that strength develop once more. But it's all going to come down to what information we get out of the Bank of Japan. CAD yen at the moment is quite interesting. We've seen price kind of come into these lows here on the weekly chart. We're rebounding those lows. Probably get rid of this 106, but 104.50 seems to be the rebound point at the moment. Daily chart, we're back in. Yeah, look, we're back into these sort of daily swing highs. It looks like the market is kind of ignoring that at the moment. Seems to have breached it. Let's just have a quick flick down to the 4-hour time frame. Yeah, I mean, a breach of that high there does suggest that maybe sellers aren't really too interested at the moment. If I was to look for anything though, obviously we've had a big sort of move here. That area in there could be a little bit of support for price. I mean, look at that daily chart. To me, that's again, it's another sort of a range at the sort of top of the market, really. I mean, if we go look at the weekly chart, we've been pretty bullish, obviously, since 2020. Looks like we're finding a bit of support that weekly. So I wouldn't be surprised if we did go and sort of test sort of the 110s again, maybe. You know, that obviously that CAD data is pretty good. CPI month on month up to held at 0.1%. They were expecting it to come in lower. CPI year on year held at held as well, 3.4%, although that was revised down slightly. And CPI year on year is also kind of held up a little bit. So depending on the sort of GDP month on month as well on Friday, you know, if that comes in positive as well, CAD strength could continue in the short term. And with the Bank of Japan kind of coming out and saying, look, we're going to keep things as they are until we can be proven wrong, then, you know, maybe the yen will weaken a little bit more. Right, guy, I agree with you, Ifran. I'm in that trade right now. Have to go down to 2.2. Yeah, let's go take a look at natural gas then, because we have been short on a couple of occasions. And I can't remember who actually bought up natural gas. I swear it was Codit. If Codit's in today, let me know. And I think Codit was actually looking to long it. And we did some analysis on it. We looked at the COP report, seasonal reports. It looked very bearish. So we decided that it'd be better to maybe look for the short side on natural gas. And yeah, we haven't really looked back since. You know, the market has just been falling. So this was the trade terminal here. You know, these were the sort of trades that I took on the market. We had a short here down to there and a short here down to here. But yeah, market's kind of come back in now, hasn't it? It's kind of come back into that area. We're starting to sort of break the averages again. We've got that sort of head and shoulders pattern. So yeah, I like that idea. So Raga, you're looking for it to come down to 2.2, back into this sort of area here. I quite like the sort of 2 handle down through there, you know, all these lows back through this area. Let's see if we can get up a Commitment of Traders report. Let's see if there's anything that's kind of changed over on the Commitment of Traders. It might not have, but we can have a look, of course. Just bring this down. Let's have a look. Oh, was it you, Ifran, that brought up a few weeks ago? Oh, nice. I can't remember who it was. Thank you for pointing it out anyway, because I hadn't traded gas for a while, and I ended up doing fairly okay out of that. How do I get rid of this? Go out of the way. Arthur, welcome. Let's go to cut chart here. Just want the legacies, and we want to zoom that up a little bit. So we are starting to see a little bit of buying coming back in. That's obviously natural, because on the commitment of traders report, that's what we're looking for. If price is moving down, then commercials are going to be buying it because they're in the market for business. Okay, so it makes sense for them to buy it as it's low. What I would be looking for is this extreme that formed back sort of, when was that? Let's have a quick look. So that was back in March, back on the 6th of March 2023 was when we had that high in the contracts. Okay, so that kind of where it peaked off, and we've seen a little bit of a move to the downside. I think if we got back towards this area here with the long contracts, we may start to see a little bit of a move back to the upside. But you can see that low there. I think that's a good area to look for targets on this market. This swing low down through here, that 2 area looks pretty good to me. And obviously if we breach to the downside, then you know, we're looking at something completely different at that point. But yeah, natural gas is definitely an interesting market, as well as sort of the oil markets. You know, oil markets just seem to be, every time they're kind of finding a little bit of a rally at the moment, we're getting a very sort of interesting shift to sort of selling it again. But we are back into sort of that $68 area, you know, so I do expect some kind of relief rallies to come in oil. We've also breached the previous day's highs now at the 70 sort of 72 handle, you know, so maybe oil prices are going to start climbing a little bit back towards the sort of 77s, 78s. So that's another interesting market. I do quite like looking at the oil markets there. I do feel like these could sell off a little bit more. Obviously, fundamentals at the moment being a little bit of a driver for a little bit of a recovery in the market at the moment. Look to be struggling around that sort of 74.13. So I think if you are interested in oil longs at the moment, above 74.13 would be a little bit more ideal to look for a move towards the 78. If it holds here and starts breaking to the downside again, then 68 is definitely something to watch. But obviously we can see this has actually been a pretty important level recently, so I would keep a good eye on that one if you are an oil trader. But yeah, let's just flip back to natural gas. I like the idea that price is moving lower again. We've closed below the 50 again. This is the 4-hour time frame though. If we look at the hourly, we closed below the 50 here, you know, and that is what I've been using to sort of get short in the market. If we kind of flick back and get a little bit more information in, you know, when we break below the 50, oh, didn't mean to do that. When we break sort of below the 50, we can see the market can often sort of take off again. And this is also important if you do use indicators in your trading. You know, here's a good example of when it doesn't break. You know, there's 2 examples there when price breaks back above and the market rallies again. But, you know, if you were looking at that level as resistance, price came in, wait for the break below the 50, we didn't get it, so the market's continued higher. So now we're starting to get that sort of price action again. Could mean that we are heading back towards that 2.2. 2.2 is actually not a bad target considering it was the low there. So I can see why you're looking at those targets, right, guy? 13th of December lows through there. That makes sense. Looking at that as your sort of targets for shorts. Yeah, might have to look at a potential for this market. But I'll hold out a little bit. I'll see if we get another pushback to the upside, because I feel like I may have missed a little bit there. And again, I like to try and, you know, boost my risk reward ratio a little bit. So maybe if we can get another test of the 2.5, another rejection up in here, then that could be something where I can get a nice risk reward ratio. Because if I've got a short here now, stops above the highs, I've just, yeah, it's nothing that really appeals to me, that. But yeah, I like that. I like the idea of natural gas moving lower. The stock markets are definitely something that is interesting at the minute. Obviously, we talked about sort of the Dow last week breaking into new all-time highs. We've got the same really with the NASDAQ as well, starting to creep above those all-time highs as well. The S&P 500 is on its way there. It's making a move to that point. And, you know, it'd be interesting to see what happens here. Like I said, I think the market's definitely pricing in a move up to this sort of pricing in the move from the Fed, sorry. And that's why we're getting this sort of stock market rally. Hello, I don't know what that is. Don't share links to other things if you don't mind, guys. Ifran bought it up a few weeks back. Yeah, nice. I mean, this was the area we were talking about down here, and I didn't even buy it myself. You know, that is a big move that I've missed out there. You know, that's a 15% rise, and I don't see this stopping, to be honest, before those highs get met. So you can see here it reacted quite nicely to these lows. So I think that's the only thing you can really look for again. Maybe a move back to 47. If you find support at 47, there could be something in the short term up to the 4,800. I'm going to add an alert there, see if we can get sort of the last move into the highs maybe. But yeah, stock market's moving higher. Haven't managed to really get on into anything in the FTSE yet. Seasonals are usually pretty good for the FTSE, and I was looking to try and get long from these lows, but we haven't had any moves just yet. The market at the moment kind of holding at these range highs. I've set another alert there at 77.18 just to see if we get any kind of high rejection. Again, I think obviously if we breach that range high, we're moving a little bit higher. But I was looking at some seasonals, and you know, one of the patterns was the fact that the FTSE is usually quite aggressively bullish through sort of end of December. So not really set up the way I wanted it to set up. So not too fussed about that one. Bitcoin's not quite where I want it to be yet before I look at anything there. Euro pound. Now Euro pound's actually one I like the idea of being short on. I do like the idea of being short Euro pound. Again, if we kind of think of it in terms of what the central banks are doing, ECB, I think, are more likely to cut interest rates. I don't see the Bank of England cutting interest rates just yet, because inflation is still fairly high in the UK. So Euro pound for me makes a little bit of sense to see some downside on. We've got this 8,500 support, which is going to be something that is going to be interesting. I think if price can come back and test this level, that'll be a good target for sellers. 0 is about 85. And then obviously if we breach that, we've got these kind of lows down through here as well. Let's just flick to the daily chart. Yeah, I mean, look at this price action here. You've kind of got a rejection back at this high, haven't we? Markets come in, rejected these highs. We've had a nice little sort of bearish rejection there. I think a lot of people will be looking around this sort of area to see if we can get any kind of rejection. So maybe this is something we look at, maybe a bit of a euro pound move. From a fundamental picture, it makes sense. So that could be something to look out for. A bit of a move back up into this area here, and then a continuation targeting these kind of swing lows at that point. Sorry, guys. People posting different links in here. 1 second. I doubt those links are going to be helpful to anybody. Unless you want to post something that's going to help somebody, we can't have it in the chat. Well, then, guys, we've been running for about 40 minutes, but like I said, there's not going to be too much details going on this week. The videos that I'm posting this week, I'm going to be just more based around sort of strategies and helping you on how you can get better in the markets for 2024. Obviously, it'd be nice, you know, to end the year well and then go into 2024 with fresh mindset, fresh outlook, and go again for another year and see obviously what we can do going into next year. I'm going to be doing on Thursday maybe a little bit of a seasonal catch up. We'll have a look around, have a little look at the seasonals and see what we're going to go into January, potentially facing some good markets to look for. So we'll do that. I think on my watch list at the moment, I don't actually mind that sort of euro pound. You know, obviously I've had a good week so far with dollar Swiss shorts, so not too fussed about getting involved with anything much else at the moment. Maybe if I get another sort of 5-minute rally back to the 200 and a potential short there, then there could be something going on for me there. But other than that, I'm gonna leave it at that point. Rago, thanks a lot for the videos. You've really helped improve my trading this year. Much appreciated. You're absolutely welcome, and that's, you know, that's the reason why I love doing it. So yeah, thank you as well for turning up, watching the videos, subscribing to the channel, and you know, giving you time to watch and stuff. I'm glad that, you know, I've helped you, but you've also helped the channel grow. So I appreciate that as well. So I'm going to leave it there. If I don't catch you on Thursday, have a good Christmas. Obviously, I'm going to be here 2 p.m. GMT. We're going to go over some of those seasonal patterns going into January. But if I don't see you, have a good Christmas and a good New Year. And thank you for everybody that's commented. Ifran, Vincent, Guy, Arta, I can see that you've commented. Thank you. And thank you for all your comments and questions. And yeah, cheers, guys. I'll catch you on Thursday.